not really like, let's say, future or spot market, but because of influence, you may end up investing your money on other things that may not be suitable for you. So these are one of the reasons why we usually organize meetings like this. And when we are teaching, we teach people on different instruments, and to help them make a very informed decisions. So we will discuss this tonight. Differences between stock. I'm trying to connect to another device because I'm streaming on more than one channel. Sorry. So I'll be taking questions from different channels. Yeah. So we'll be discussing the differences between the stock and the online forex. There are some little things you may need to know. One of the major differences you need to know about stock market and online forex is that the major one is that the stock market involve when you're buying shares of companies. It can also be share of individuals. So when you buy them, you can purchase them in a small portion, mean that you are indirectly becoming a part of the company, like ownership of a specific company, especially those companies who are a public company listed on the stock exchange. Let's say, for example, you are buying Facebook shares from New York stock market or any stock exchange that Facebook shares is available for you to purchase. You automatically have a portion of ownership of Facebook. If Facebook shares going up, then it can be able, if you are buying Dangote shares, you should also be able to have a share value. But when you talk of forex, you're actually speculating on currencies, pairs, which is quoted online. That's exactly what you're talking. You're trading. So example could be Euro USD. Example could be like Euro USD and or USJP. I don't know if someone can hear me. If you can hear me from Instagram, you can type one. If you can hear me from Instagram. So these are the major differences between online stock and forex. Then another thing is that the stock market has a particular hour where it is being traded. Yeah. So there are market hours, trading hours for stock. So generally, it operates during a set of maybe it can operate even on weekend. So based on the country where you are, I mean the stock market. So we have the major stock market. We have something like New York Stock Exchange. We have London Stock Exchange. Then we have Nigerian Stock Exchange. While the forex market open 24 hours. I think Nigerian stock, some of the stock market opens around 8 a.m. and close by 4 p.m. While the forex market is 24 hours, and it operates through the over the counter and connected to different banks. That's one of the difference. You may notice when you want to trade live, or when you want to trade stock market or tomorrow, as we are going to teach you on different types or on how to trade stock. We call it equity because this week is actually investors week. It's World Investors Week. So globally, the week we investors all over the world get educated on how to make sound investment decision and how they can be able to navigate on different markets. Then that's the most important thing you need to know about it is leverage. You must have heard about leverage. When you're a stock trader, you most likely don't need leverage. For example, Nigerian stock, you just have to go in with your stock broker and buy a unit. most of the Nigerian stock market has gone up to 37% this year. Some have gone up to more than 30%. So last time when I was there, I got a lot of good reports about the performances of some stocks. So you don't need a leverage to buy them or to invest in stock. There's no leverage at all. Why in the forest you have to use a leverage. You may come to invest in local stock with just $100. Sometimes you can invest through your bank app. You use a portion of your money in your bank and just buy shares automatically, because of the new rules on investment now allow you to trade on to use your bank app to buy shares. Someone just connected to me, but please make sure you are in a very quiet place, because uh, you ought not have connected if you're not in a quiet place. So there are major differences, very wide difference. So somebody will ask you, why is it that some big men doesn't trade on online forex? They're the one controlling the regular stock market. There are a lot of differences. For the fact that you don't know how it works, you may think that everything ends in online broker. No, everything does not end there. What makes you to be a very good trader is ability to understand a lot of all these things. Because some of us got to know trading through internet or through boys who are flashing different type of cars on Instagram or stuff like that. Like we call them influencers. So we don't really understand much about all these things. But when you start digging deep, learning more, that's when you get to understand more. So as a trader, you need to be versatile, understand how a lot of things works, so it can help you make informed decision. When we are teaching in our school, in our training school, we don't just teach you forex. Forex is just one side thing. We teach you randomly on a lot of things and show you how you can be able to navigate them and become good of it. Then another third one is volatility. One of the major difference between stock market and the forex. Tomorrow will be practical because one of our stock trader from a satisfied investment dealer from Nigeria will be teaching us on equity investing, which is stock market. So I'm just giving you some of the informations that you will need, because tomorrow will be very much practical and it's free for everyone to join us tomorrow to learn how to trade on stock live. The fourth difference is volatility. Volatility plays a very big role in both stock and forex market. However, forex market is more volatile than stock. It's more volatile. I think a lot of you trade on crypto. Say that so crypto is unnecessarily volatile, unnecessarily. That's also why most investors don't want to invest on crypto, because sometimes it can run out of control. So the stock market, or let's say the individual stock, can be a bit volatile, but the broader stock, like the big company stocks, are not as volatile as forex. So they are very very calm, very very easy, um, and people can be able to make informed decision about them. So generally, stock market is not too volatile. That's one of the difference between stock trading and the online forex. Now, there's another one that's very very critical. You need to know before tomorrow. The factors that influences it, like we call it factors influencing price. The price of stocks. There are a lot of factors that influences it, which is different from factor that influences forex. For example, the stock market is influenced by a company's performance, earning report, industrial development, and broader economic factors. So, although investor sentiment can play a role on the stock market, but take note, what influences the price is how the company you bought their shares perform. Then the earning report. So let's say the previous people that bought the shares, their shares have performed very much better. Then they will produce their own report, their earning report. Then it will encourage the upcoming investor to go in and invest and also that particular sector, that industry, how it has been developed. Like for example, now AI industry is really driving on fintech. Most fintech shares are rising drastically in the stock market, and you can make big amount of profit when you invest in stock. Big amount of profit. Why the forex market is driven by macroeconomic factors like interest rate, inflation, geopolitical events, central bank policies, trade balance, economic indication, GDP. So these are things that influencing the forex. Do you understand what I'm saying? So if you understand what I'm saying, you can just say yes, you understand. So these factors is very important to get you prepared for tomorrow class. Factor that influences forex and factor that influences stock. One of them, as I said, is that stock market is being influenced by the companies of that own those shares that you are investing in. Then their performance report, their annual report, and also um, maybe the industrial development. Why in the forest market, what influences forest market is like interest rate, inflation, like it's like a broad factors that influences the forest market. But we also have another influence. I call it objective. Stock trading primarily focus on growth and value appreciation. So many investors who buy stocks for a long time holding, they benefit from the company growth, or they also earn their dividend. That's one thing about stock. So, so the more the company grow and the value of the company appreciate, them they make their money. While the forex market is more focused on short-term gain through price fluctuation. Do you understand? The price fluctuate, then you just make pick money from the price fluctuation. And the forex traders often aim to capitalize on exchange rate movement and may not hold position for long. Do you understand? So if you're the forex trader, you're more concerned about the exchange rate, the value of the one currency and another, the rate which they are buying and they are selling them. While the major objective of stock trading is focus on growth and value appreciation of the particular company you are trading. And investors tend to buy the shares and hold those shares for a long time. You can buy a share of a company and hold it for 20 years. You can buy a share of a company and hold it for 50 years. So you can own a lot of shares in a company that it will become a very big asset. For example, so you may own a share of a company in a country that the value of that share will grow to the point that the country of that owns the country of that company can even give you a citizenship because you have invested a lot of money into their stock market, and you can be able to convert those things into something meaningful or other things. You can benefit from it. Then there's also what you call transactional cost. Some of you call it spread when you're trading forex. But in stock, it involves what is called brokerage fee or commission per trade. So some brokers may charge you some little commission, not spread. But in the forex market, there's a bit lower transaction cost, of course, because you may have zero spread, you may have maybe 1 pip spread. Then and you also have the choice um, of getting a reward. You know what I mean? So these are like some major differences between the stock market and the forex market, and the commission or the charges which you incur through the forex market is basically between gotten from the difference between the buying price and selling price, which we call spread. So and it is not exactly with what we call commission. Do you understand? So these are the major differences between the stock market. Anybody want to join me, please make sure you are in a very quiet place and where you are won't be too noisy. then it will really help you to hear me, and you won't like make others uncomfortable because of the noise coming from your own side. But there are potential profits in trading or in investing in shares and stock. There are a lot of profits involved which you can be able to maximize. So in the area of forex, so due to high leverage and frequent price movement, understand the price move very much frequent. Forex trading can yield peak substantial profit, or on a small movement, it could just make big profit. Then skilled traders can also predict currency movement. They also may capitalize in those short-term movement, so potentially achieving higher return. They could just make quick money very quick in forex. But in the stock market, you can hold up. It's also very, very much profitable, highly profitable as well. But it is basically designed when you hold a position for a long time for that profit to be actualized. Do you understand? So on the growth, the stock have capacity to grow. Take note of this thing. If you're a stock investor, you want one of the major difference that the stock has capacity to grow, and the more the stock of that company grows, the more you make more profit. And if that company maintains substantial growth, then you will now have more chances of maximizing your profit. Are you seeing the major difference? So why the forex trading profitability is not exactly structured the way the stock market is structured. So these are the small differences that you may need to know. Let's say small. I would say the huge differences. There's also what we call risk and volatility in the forex market. So forex market is highly volatile, and it's a leverage product. The forex market is highly volatile, and it's a leverage product. Very, very highly volatile. Then there are so any small change in the exchange rate in forex can quickly magnify your gain. It can also magnify your losses, especially when you are using leverage to trade forex. And it's difficult for you to trade forex without leverage. It's very much difficult for you to trade forex without leverage. So all these things plays a very huge role in like on volatility risk. But on the same volatility risk, when you come to stock trading, of course it can be a bit volatile, but the stock market provides tangible asset as investment. So it is actually company. So and now, because of that, there's possibility of maintaining stability and growth. I don't know if you understand what I'm saying. If you understand what I'm saying, you could just type one so that I will know that you're following me up. Those on the YouTube, if you understand what I'm saying, you could type one. These are the differences in many things that is very much important for you to know the difference between stock market and online forex. Now, there's another one we call market access and cost. Forex trading generally has a lower barrier entry, allowing people to start trading with small amount of capital due to high leverage. Because you come in with $100, you are taking leverage of $2,000. So you may think that it's easier for you to start it. Then forex brokers also offer a low or no commission. So they rely mainly on the spread they are giving you. So this can also make forex traders to be more cost effective for active traders. Why on the stock market for long-term investment, the cost associated with stock trading may be lesser. Do you understand? It may be very much lesser, and also the brokers may also reduce their commissions because you know Stock trading is not really too competitive on a short-term level. It's more of a long-term projection, and that's why big boys who are stock investors make a lot of money through it. Now, it's also stock market is easy to learn, and it's also easy to develop your skill. So, while the forex market requires what I call solid understanding, you need to know much about forex, know about indicators, know about economic event, know about technical analysis, know about fundamental analysis, know about, in fact, the beginners in forex market, they usually face a lot of challenges at the initial stage of trading. I don't know if I'm making sense. If you're a beginner in forex, you have chance of facing a lot of challenges. Why the stock trading will only require knowledge of financial analyst. Do you understand? So it means you itself may not even need much to go into into equity investing, because a licensed financial advisors or analysts, they are already there to help you make some informed decision. So they may tell you, give you some recommendation if they are licensed to do that, or let you know exactly what you should do concerning your investment. And it helps to reduce you the risk of being vulnerable to the market, because you're already dealing with a professional already. Remember, the stock market is regulated, while most forex brokers are not regulated, depending on the jurisdictions where they are connected from. Now, there what is called investment horizon and goal. Those who are trade forex market, they focus on it's musically like an individual stuff. So sometimes those who are even on the forex market don't even believe the business itself. They just want to put like maybe $200 and know what they can do. They run away from it. But that same person will go to the stock market, meet his stockbrokers, and put $10,000 on the stock. So now, why is it like that? Because it's easier for you to understand the stock market than the forex. Because let's say now you are investing on Dangote. The information about Dangote is there. You read about the company, the structure, their projection, what they are doing in the market, and whatever thing, then you could be able to perceive or get an insight that this particular share will rise. Then it can quickly go in. It can quickly go in and buy it. But why, if you're a forex trader, most forex traders, no matter the knowledge, they speculate, because there's no actual reality, actual connection. They cannot, even the things they are reading, they can't even relate it with physical reality, because it's not a company. They can't go somewhere and get exactly the exact information they want. So that made some of them, since there's no clarity or whatever, they will just prefer to go into to the market with small amount of money, speculate in, speculate out. They can make money, they can lose money, then they go away. Why they have discovered another market, the stock market, where they can be able to invest heavily in it and see their dividend and their returns grow in or grow over time. You see, some people will buy shares for their children, even for the maybe little kids, underage children. They can buy for them, buy for their wife, buy something for them, like in the future. That's the thing, that they already know what's going to happen. But somebody will not necessarily open a forex account for his 2 years old child, expecting when the child grow up, become adult, maybe the share of the company must have gone up, then they will make more money. No, but it can happen in shares. You can use the share market, the stock market, and build a very multi-million dollars portfolio. And it's easily to trade. Now, globalization has made it easier, where you can easily navigate to all these things. We teach you these things, how to navigate them. That's why you have to register in our trading scheme. That's also why you are following us. You're not just following us because you want to follow somebody. You're following us because so that you could be getting value, free value or paid value. Tomorrow is the major class where we are going to teach you more on this thing. Tell you exactly how to trade on stock, open the market for you. You'll be able to trade on normal stock market that's not online market and able to cash out and see how it works. By 10 a.m., those who are interested that will join us will join us live on the Zoom. Some will join us live in the office. We'll be taking you step by step on how the stock market works. Let me know if you have a question. Let me know if you have a question. Let me answer your question. Do you have any question? You may want to ask me. I'm free to answer your question. Any question?